In today's video, I want to introduce one of the best smart money concept indicator on TradingView that also gives prediction on the probability of breakout on the key levels of the market. To add this amazing indicator to our chart, here we click on indicators and we search smart money concepts probability. We add this one, smart money concepts probability expo, which is written by Zierman. Alright, this is the indicator, and as you can see, the indicator has added some lines, labels, and some information, which if you know about smart money concepts, so you know what these lines and labels mean. Let me explain smart money concepts very shortly for those of you who don't know about this. In the simplest word, smart money concept is price action analysis, but with a different name and approach. Smart money concept uses classic concepts like supply and demand, support and resistance, price patterns, but the concepts are renamed and described in a different way. Smart money concept is an entire philosophy about how the market works. Its core concept is that market makers are manipulative participants in the market and they trade at specific levels. These market makers are banks, institutional traders, hedge funds, and other financial entities that buy and sell assets in financial markets with very large capital. And this is called smart money. And actually, it's the smart money that drives the market considerably. So because smart money causes major movements in the market, so it's very important for retail traders to find out what is going on with the smart money. And smart money concept is a methodology or trading technique to determine how and why the market makers buy and sell in the market with their large capital. As I said, this is nothing new but just a combination of key levels, supply and demand zones, and market structure, but renamed and described in a different way to help traders better understand the key levels of the market with higher potential of smart money flowing. There are many different concepts and terms in a smart money concept method of trading, but the most important ones are break of structure, change of character, shift of market structure, among some other important concepts like order blocks, breaker blocks, and mitigation blocks, and fair value gaps. Order blocks refer to supply and demand, but they are a more defined concept than regular supply and demand. Breaker blocks and mitigation blocks refer to support and resistance, and fair value gaps refer to an inefficiencies or imbalances in the market when the buying and selling are not equal. This indicator includes change of character, shift in market structure, and break of structure, which are actually the most important parts in smart money concepts. I will try to make a comprehensive guide to smart money concepts covering all the important terms and techniques. Just make sure you're subscribed so you won't miss it. Alright, let's see what are change of character, break of structure, and shift in market structure. As you know, we have a general structure in the market. It's trending up, it's trending down, or it's not trending. For example, when the market is making lower low and lower high, it shows that the market is trending down. Or on the other hand, when the market is making higher highs and higher lows, it shows that the market is trending up. But when this formation is broken and the highs and lows are equal or just in a way not fitting the definition of uptrend or downtrend, it shows that the market is not trending. When the market is making lower lows, each of these lows create a demand zone. For example, here, when this low is created, this low creates a demand zone, which means when the price reaches to around here, we expect increasing of demand and so advancing of the price. And when this level is broken, the indicator shows BMS, breaking of market structure, and it's actually a confirmation that probably the price is going to decline more and the downtrend is going to develop. And on the other hand, when the market is making higher high, each of the highs create a supply zone. For example, here for this high, when the high is created and the price, for example, is around here, this high creates a supply zone, which means that when the price reaches to around here, we expect increasing of supply and so declining of the price is expected. And when this level is broken, it is breaking of market structure. It shows that the price is probably going to advance more and the uptrend is going to develop. This is the meaning of break of market structure in uptrend and downtrend. And besides this, we have another important concept which is called change of character, and it's shown by CHOCH in this indicator. And it actually happens when the general structure of the market is changing. For example, here the downtrend is changing to an uptrend. Change of character happens when the price breaks the previous lower high in a downtrend, or in uptrend's previous higher low. This is a signal that we have a major shift between buyer's pressure and seller's pressure, and this is a potential area for smart money flowing. So many of the times this is a sign of reversal. And please pay attention that here in this this indicator, by default, we have structure period set at 20. And because of this, it's applying a wider range for identification of change of character. And so we have change of character here, for example, based on this lower high and not here. But if in the settings we decrease the structure period, for example, to 10, you can see that this indicator identifies change of character based on this lower high. The lower the value for the structure period, the higher the risk, but when it's set at higher values, we have higher probability that a reversal is truly happening in the market. In this case, we had an instant reversal, but many of the times the price may go to a trading range before either continuation of the prior trend or a reversal. So please pay attention that change of character doesn't necessarily mean an instant reversal. The safest interpretation could be weakening of the prior trend, and for taking any trading decisions of the reversal, more confirmations would be needed. Here in the right side of the chart, this indicator also shows the current range of the market, including the premium and discount areas within the range. The green area is discount area, which is in fact demand zone, and the red area is premium area, or in other words, supply zone. In cases that we are in a developed range, they provide us trading opportunity by buying at discount and selling at premium. And this indicator also provides probability of the 3 key levels, which are displayed here and here as a percentage for the respective levels. For example, you can see that here we have 71% probability that the price will break down the lower range and making a new shift in market structure, and we have 29% probability that the price will break above the upper range and make a change of character. These predictions give you some insights about probable movements of the market. So when you're analyzing the chart, and for example when you have a bearish signal here, so you have also a measure of probability that can better help you to evaluate your trading decisions. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.